There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations. No need to fear the Fed now.
Hey everybody, welcome to the Payments Podium. I'm the Payments Professor, Kevin Olson, and I'm welcoming back Steve Cree from ECCHO. And Steve, I want to welcome you back. Say hi to everybody on the Payments Podium.
Hello, everyone. Thank you for having me back again.
All right, the last time Steve was on, we started talking about, we were going to say, hey, are we going to talk about check fraud, or we were going to talk about, is the check actually relevant? And we just started talking about, is the check relevant, and had a wonderful conversation. I hope all of you got to understand, yes, the check is a very relevant instrument, a payment instrument. But there's the thing, and we even said it in that podcast, if there's a payment taking place, there's a possibility of fraud taking place. And one of the sad realities that is happening in today's world is check fraud. Steve, am I wrong in saying we are seeing a lot of check fraud right now?
We are seeing a lot of check fraud right now. And as we look at it, there are those who say that the problem is not check fraud. The problem is actually mail theft. And check fraud is just a symptom of that real problem, which is mail theft right now. But yes, there is an exponential amount of check fraud that is going on.
Okay, that's great that you right away, because when I say check fraud, I and people tell me that, I say, well, what kind of check fraud? Because when you say check fraud, that's really a very broad general statement, and you narrowed it down right away. So, I mean, can I ask you, when you say check fraud, can you give me an idea of what other types that are out there?
Yeah, there's a lot of different types of check fraud out there, but really they need to start with some sort of a raw resource, right? And that's the theft of the check is typically what we're seeing. We're seeing the theft of the check, and the easiest place to get that theft of the check is through the mail. Of what's going on. But as an end result of it, we see all sorts of things. We see alterations, we see duplicates, we see counterfeit, forged maker, all sorts of different types of check fraud that's going on. And so, but it really starts with getting their hands on that first initial raw material of the check fraud, and that is a check.
Well, what I love and what you just did is you said forged maker, counterfeit, duplicates, alterations. And I have to tell people that's where the magic really is, because once in there's this word called liability. And that's one of the reasons why, we need to understand what actually happened to be able to understand where that liability comes in. And that's one of the key things in check fraud, is understanding what happened. Before we go there, though, you talked about the mail theft happening. One of the things that I think is crazy about when I'm seeing check fraud is it's gotten specialized.
Yes.
Like, can you expand on that?
Yeah. So, if we were looking at check fraud 30 years ago, what you would have seen is an individual or two in a ring that they're going and they're stealing checks primarily from people's mailboxes. Right. And so, as a matter of fact, we used to laugh about it, because you could see the new ring coming down, because you would see the different cities that it was getting hit, and it would be on an interstate, and you could watch them come on through. But what they would do is they would steal the check. They would modify the check in some way, usually washing it. Right, and changing the payee and or dollar amount of that check, and then going ahead and being the ones who then deposit that into an account. And so that's the way that we used to see check fraud.
One person or one group of people.
One person or maybe two people. Right,
and they would manufacture that check into multiple checks, something like that, right?
And they would take it from beginning to end, from the point that they took and actually stole the original check to the point that it was being deposited into an account. And you can only do so much, and you can only get so sophisticated with doing that. What we see is a drastic change today. We see specialization in check fraud. We see almost a mass production of check fraud. And so you have one group that they specialize in stealing the mail. And what they're doing is they're doing things such as getting the keys, the master keys for the blue boxes, and going in and going through a master key or a skeleton key for that can open all the mailboxes.
You need actual keys to the post office keys, like for the big blue boxes we see on the corner or the ones we see at apartment complex.
The big blue boxes you see on the corner, and one key will open all of the blue boxes in a zip code. All right, and so that's where you see them going and stealing from post office personnel, getting a hold of these keys, selling them or copies of them on the internet or through various social sites. We hear about the dark web, and I used to always think the dark web was a small little thing, right? But what is the dark web? The dark web is the areas that you typically don't go to on your browser, and it's about 80% of the web is the dark web. And so that was really a surprise to me as I started learning about this. But you have a group who actually specializes in stealing the mail. They're going to turn around and sell those instruments, those checks. They're going to sell to an individual who is now going to modify those checks. Now, we used to see the modification, like I say, of washing. Of course, certainly that's still done, just as one individual still is out there who will do the whole value stream of stealing a check and depositing it. But now people are much more sophisticated in that, so that now what we're seeing is they're using technology, because for under $1,000, you can get the computer, you can get the software, you can get the printer to print the checks. And so they
go buy a bundle of check fraud equipment, basically.
Exactly, and they will image. So they have this bundle of. Now they have the application. They'll buy the raw material of the checks. They'll image them. They'll match the font that the check is written in. Then they'll go ahead and delete the information that they want to change on the check and put it on again. Now they'll print the check and then many times they can even sell that to a different group who now take those newly printed checks and will go ahead and do the deposits of them.
Okay, so if I hear right, we had one group that went out stealing them. They sold those checks. Now we've had one group that has now altered them, and they're selling these checks to somebody else.
Yeah. Well, and I didn't mention there's a group actually between the ones who are altering them and the ones who are stealing them, because the ones who steal them will go ahead and sell them to the group who now is selling groupings of them on the dark web. And so you can go out and you can see these checks for sale, and they will sell it to them, the people who are now going to modify them. And they even give guarantees. If I sell you 5 checks and one of them doesn't work, just let me know. I'll send you out a new check. And
fraud with a guarantee.
We've seen instances where they've actually guarantees on it. And so it's a whole different atmosphere out there now with people who are very specialized in one part of that channel of doing that forgery. So they're becoming very sophisticated.
So I'm envisioning this. People like you and I, we get together at a reception at a conference and we'll start talking, hey, I'm a payments expert. And we'll be like, well, what area of payments? Are you in ACH? Are you in RTP? Are you in checks? These guys now get together and like, I'm in check fraud. And they're like, well, what area of check fraud are you in? Are you the guy stealing the checks? Are you the guy washing the checks? I mean, who's depositing the checks?
Yeah, exactly. And so what they've done is they've taken these different areas of ours that we have controls and whatnot in, and they're trying to specialize in how can I get around that, right? And so what we see on accounts, we see aging of accounts, people who go out and open accounts and they actually age it, put transactions through them. And then after they've aged for a certain amount of time, they'll go ahead and sell those accounts to someone.
Now, why do they age it? For people who are listening, what do you mean by aging account? Why do they even age an account?
Well, typically when a person goes out and opens up a new account for a certain amount of time, you're going to be not giving them the same availability. They aren't going to have as fast of availability to the funds. So you have a chance for that check to go out, hit the paying bank and come back to the bank of first deposit and actually pull those funds back. And so that's one of the things that by aging the account, especially if they're putting transactions through it, that some of those protections probably aren't out there anymore on that account.
So basically, a brand new account, they're going to watch it more. They're not going to let it do as much. It's just like a teenager gets a license. You don't let them just take the car out whenever they want until they've got some more experience under their hands.
Exactly. Before they leave that day, you probably check the odometer to see how many miles they drove, right?
Exactly. That's a good. Okay, and that's a lot that is happening just to be able to commit simple check fraud.
Yes.
And it's interesting too, because, people will say, I thought that was a thing of the past. And what I have found too is it seemed like check fraud was a big deal and then it started to go away and now it's come back.
Yeah.
Well, with this comeback, what do we do to fight back to get it to go back away?
Well, there's a lot of things that we need to do, and the first and foremost is get education on what is the industry. Really, truly understand what is the responsibilities for the different organizations, because typically, what you're going to do is you're going to concentrate on areas where you have liability, and so. The first and foremost, the number one thing you can take and do to mitigate the risk is to educate your people so that they truly understand the check channel, that they understand what are the warranties and indemnities that are being given, because it changes on who is responsible. So when we talk about these different types of check fraud, the method they're using to do the check fraud directly impacts who is responsible for that fraud if it's not caught. Right.
And by who? By who? You mean actually the bank that is involved or the credit union that's involved, either where the check got deposited or the check that it was written from, correct?
Yeah. And if you'd like, we can go over, three of the most common types of check fraud that we see out there.
Oh, don't you tease me. Let's do that. Yeah.
Okay, well, so old school check fraud, and it's still being done, is the washing of the check. So they've stolen the check. They have the stolen check. They're put it in a solution that's going to take the ink off of the check, and then they're going to put it back on. And so typically, what you see them changing is as little as possible, and so it's the payee and or dollar amount when they're doing that. And more, what we see them doing is not changing the dollar amount, but only changing the payee. And the reason behind that is they don't want it to bounce when it gets to the other institution. Also, we know that many of the businesses have some sort of pause pay. And so if it's a different dollar amount when it comes, again, the red flags go off. So if you only change the payee and the organization does not have payee pause pay, then that's the most easy to go through. Now that is considered altering the check when they do that, just as if they had gone and added information onto it. But that is going to, in an altered check, that's going to be the responsibility of the Bank of First Deposit, because they make a warranty that the check is being paid to the correct payee, that the payment instrument has not been altered. Those types of things are part of the presentment warranties that they make.
Okay, so Bank of First Deposit, it's what the name says. It's where the check first gets deposited.
Exactly.
That bank, wherever, and it's even funny too. It's Bank of First Deposit, but it's really financial institution because it's a bank or credit union where that check first gets. We actually call it presentment or deposited, where it actually gets shown, right?
Yes. When I use a term bank today, what we're going to be talking about is a bank in a generic term. Right, and that is any financial institution. And so now the second way that they do it is sometimes when they wash the check, what they'll do is they'll actually submerge the whole check, and everything on that check is taken off, all of the ink, and they have to put the whole payment instruction back. Many times what they'll do is they'll take a photocopy of the signature ahead of time, and one of the few uses for NCR paper yet is to take and put that photocopy, put NCR paper between that and that wash check and trace that signature back over the top of it. And so, but in this case, now what you have is you don't have a altered check. Now what you have is you have a forged maker check. In fact, the maker did not sign that check. All right. Now, in this case, now we made a transition on who's responsible. I think in our last session that we talked a little bit about Price versus Neal. It's a court case that goes back to English common law, 1762, before we were even a country, but it came across in common law, and now we have that in our UCC. And so in the presentment warranty from to the paying bank, what's said is, I have no knowledge that this is a forged maker or a counterfeit check. All right. And so I have no prior knowledge. Well, in fact, you don't have a prior knowledge. If you did, you wouldn't have given the people credit. You wouldn't have tried to pass the check. And so through Price versus Neal, it really says that the maker is the person who is most able to understand whether a check has been issued and whether the correct payment instructions are there. And that's kind of transferred in our UCC to the paying institution. The paying bank is the one who is going to be responsible for knowing that that's not the signature.
Interpretation real quick here. So when we say maker, that's the person who would normally write the check.
Yeah.
So when we say forged maker, we're basically saying somebody forged the signature of who would have been the person normally writing the check. And when we say paying bank, that means that's where their a bank account is. That's where they actually have a bank account. Yeah. So what you're saying in this case is, if somebody has gone through all of this washing type stuff and basically kind of pulled off or found a way to very thoroughly duplicate that signature, that when it gets through the system, that first bank where it's deposited, they have no way of knowing that's a good or bad signature.
They don't have a signature card. They don't know what check stock it's on, anything else. And so that's really, they say that Price versus Neal. And again, this is for educational purposes. We're talking today. I'm not giving any kind of legal advice. Certainly for that, reach out to your own attorney. But basically, what Price versus Neal says is, it says the party most likely to understand whether it's good or not is the one who should hold the liability. And the paying bank is the one who sees the drawer's checks, the maker's checks all the time, understands what paper they use, knows what their signature looks like, those types of things. And so they're the ones that are being held responsible for that. And so, and that leads us now, once we take on technology, to what we're seeing probably the fastest increase in, and that's counterfeit checks. All right. And so 20 years ago, 25 years ago, the number one check fraud was an altered check. All right. Today, what we're seeing is we've really passed the 50% mark from some of the studies I've had a chance to see, that is going towards the counterfeit check being the most likely type of check fraud that you're going to see. And so now what they've done in this is they've taken that initial check that was stolen. They take a image of that check. They then take and typically match up the font that's on the check. They delete the information, the payment information, typically the payee from the check, and then they put on a new one with that font, that very closely matched, if not identical font that they put on to the check. They turn around after they manipulated the image and they print a new check. Now, that check was never touched by the maker of the check, by the account holder of that check, was never touched. That is a counterfeit item. Okay. And so they're going to print that check, and then they're going to turn around and some of these are very good forgeries. They may go to a branch and deposit at the branch. More likely, they're probably going to do something like mobile deposit to deposit that check.
Okay. Who's going to be, wait, who's guilty in that one now? Who's going to be the one proverbially holding the bag of money?
So the person who has the liability in that case is going to be again, the paying bank, because again, back to that idea of understanding what the check stock should look like, to understanding what the signature looks like, all of those types of things. Counterfeit is on the paying bank to identify that. And here's the problem with that, because that means that as a paying bank, you now have to, the only way you can get recourse on that under UCC and regs Reg CC is to take and return it on a timely basis. All right. And to meet that midnight deadline that has in UCC, the day after the day on a business day after the day on which it was presented, to meet it in a way through a channel that meets the Reg CC expedited returns requirement, which is to get to the bank of first deposit by 2 p.m. local time, 2 business days after presentment. Well, if you have a very good forgery, counterfeit item, it's hard to identify that. And if, in fact, your business doesn't have payee pause pay so that you know who the payee is in addition to who the dollar amount is, probably you're not going to catch that. And that means you're held on the hook for that. Now, there is another recourse, though. There is not a recourse through Reg CC, through UCC. At that point, the paying bank really has taken a loss. Because they can't charge your customer, right? Because the check is not properly payable. So
because they never wrote it. They never actually wrote that check. They had nothing to do with it. It was the fact that this person somehow stole the check, reproduced the forged counterfeit copy. So that's why they're not held responsible.
Exactly. They're not held responsible. For them to charge the account of the customer, it has to be a properly payable item. And so it is the payment instructions that maker has created and in line with their depository or product agreement that they have. Okay. And so in this case, no, the customer who wrote the check made it out to ABC Manufacturing, but somehow rather than ABC Manufacturing, it was John Jones who ended up taking and cashing the check. So to that effect, now the paying bank is sitting there. It's past the deadlines to return it. They can't charge the customer. What are they going to do with it other than take a loss? And that is one of the areas that ECCHO can help on because we have something that's called Rule 9. And Rule 9 is a recourse to that.
Okay, wait, can I slow down right there on something? Because I do want to point out something. Again, no legal or accounting advice is being given in this session whatsoever. You need to consult your own attorney or accountant professional for any of that type of stuff. But when you start mentioning ECCHO rules, I think it's important. Everybody needs to understand you do have to join ECCHO. We have a session on podcast on ECCHO and who they are. And I highly recommend people do for these rules to apply. But if you would please do explain Rule 9 and how it works.
You bet. And so Rule 9 is a rule that provides counterfeit, warranty for counterfeit and or forged maker checks. And there's some very specifics about it. All right. So first off, you do have to be an ECCHO member. You need to be an ECCHO member who has not opted out. And so that's, over 2,400 ECCHO members out there. And so as an ECCHO member who is a BOFD, who is presenting a check to a ECCHO member who is a paying bank, they make a warranty that this is not a forged or counterfeit item. All right. And so they can go ahead and that paying bank can make a claim to them. Now, there are certain specifics that need to be met. There are certain timeframes that need to be met. The funds still need to be in the account of the depositor. The full amount of the claim still needs to be in the account of the depositor. And so it's not a method that's intended to have the BOFD now take the loss rather than the paying bank. Rather, it's a way that we are looking at how can we recoup on these funds. And so what we had a problem with when these bad guys ended up taking and having funds in their account. The BOFD has figured out I've got a bad guy who's running a bunch of bad checks through his account, and they come in and they freeze the account. Okay, well, what typically happens with that? Well, that frozen account, any new checks that come in, the account's frozen, agreeing to, they're not going to take as deposit. But those funds are going to sit in there and they're going to age until the time that you need to sheet them to the state. And here's the reason why is, there is no liability on that bank of first deposit for a forged or counterfeit item. Therefore, they can't just take and say willy-nilly, I'm going to pull money out of your account and give it to a paying bank. Now, for most institutions, they do have something in their depository agreement, and certainly in addition being a ECCHO member, you want to make sure it's in your depository agreement where it talks about if I become liable for something in your deposit, I am going to withdraw that out of your account. All right. And so that's one of the things that they do with altered, right? I am liable for an altered check. I can withdraw that out of your account. So I'm not going to take the loss on it. But what this does is that with the Bank of First Deposit making that warranty when the dollars are in the account, then they become liable. Now I'm liable for it. I can withdraw those dollars out of the account and I can pay them out to the paying bank. So the banks, neither bank is taking a loss on it. In fact, what we're doing is recouping those funds out of that account.
Wow, that's a great way to work around it. And that's what I mean, I think it's a workaround, but I mean, it's a great way, well, dealing with it. That's what it is. It's a great way to be able to deal with it and help protect the industry, really.
Yeah, it's really intended to go back to whoever benefited from that fraud and take and claw back those funds, right? So that the financial institutions. Now, understand it is not just the bad guys. It also has to do with vendors. And so, and when Rule 9 first came around, it was actually back in the paper days when we had paper clearinghouses. It's called Rule 9 because it was out of Texas, and it was rule number 9 of the clearinghouse rules. And what had happened at that time is we had organizations, we had merchants who decided it's too much of a hassle to take ID on a check. And this was during a time when there were a lot of checks being written. Now, up in the Pacific Northwest, we saw this huge spike in the check fraud at the time that this occurred. And where we were at, it was grocery stores. And what you have is a situation where a grocery store might have to, during their peak times, have to run 6 cashiers. And they said, you know what? If we don't take ID, we only have to run 3 cashiers. Think how much we're going to save all year long on our peak times of not having to run the extra 3 cashiers. Now, here's what's going to happen. We're not going to take losses because we're going to deposit the bank in our bank, that check. It's going to go to the paying bank. That paying bank is not going to take and be able to identify it or rarely identify it in time to send it back to us to get a chargeback. So we're going to save all this on our operations and we're not going to get the chargebacks. Wow. The loss is going to be in the financial institutions. That's who's going to take the loss, right? Because they knew it couldn't be charged to the maker, right? Because the maker didn't write that check. And so what we said is okay, well, Mr. Merchant, we are not going to tell you the controls you have to put in around fraud, but you're the one best able to mitigate the losses that we're getting with these fraudulent items by simply taking ID. So you make the decision. Do you run the 6 cashiers and catch these before it ever enters our system? Or do you reduce it and take the chargebacks that come back to you?
Oh, wow.
And so that's really how Rule 9 started. Now, we've since gone to what we're seeing, which is all of these fraudsters who are doing it, right? That are doing it with banks rather than through merchants. But understand, in either case, whether it's a merchant or the bad guy, as long as there are funds in the account, then the Bank of First Deposit is liable. And therefore, through their depository agreements, because understand ECCHO rules are between 2 banks, so it has to be through their depository or product agreement that they have the agreement with their customer to take in that, in fact, if they take a fraudulent item, that it's going to get charged back to them. And it makes sense. Because
this has been great. And see, we're running out of time. So would you please one more time remind everybody that this has been for educational purposes and none of this is legal or accounting or tax advice?
Exactly. This is strictly for educational processes. Before you do any action at all that needs legal advice, please reach out to your specific attorney and talk to them about what you should be doing because they know the facts of the state, the city you're in. They know the court cases that have happened locally. They know what's defendable for you. They know your risk tolerance level. Please work with your attorney anytime that you need legal advice.
Well, thank you for not just helping to understand Rule 9, given the history lesson. I always love getting the history of why we do this, where it came from, helping us with the three main scenarios. Is it altered? Is it forged? Is it forged maker? Who tends to be liable depending on the situation and the other extenuating factors, of course, that we need to look at. Everybody out there listening, I am the payments professor. And as you know, if there's a topic or if there's somebody you think that needs to be on the payments podium, email me, kevin@paymentsprofessor.com. I will do my best to make sure that we get that person or we get that topic addressed so that we are able to answer the questions that you're looking for. This is the part, though, where I get to say, class dismissed.
There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations.